Hello, and welcome to AI Market News by LEM. This video's audio is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in the summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion.
You know, we're all seeing it, right? The financial world right now feels like it's in a massive tug of war. On one side, you have this absolutely explosive, almost euphoric optimism being driven by artificial intelligence. But on the other side, well, there are some pretty serious macroeconomic storm clouds gathering on the horizon. It's a real battle, and in this explainer, we're going to dig into both sides of this incredible story. So here's the game plan. We're kicking things off with AI frenzy. Then we'll get a snapshot of what's happening globally, beyond just the tech headlines. After that, we'll tackle the big dilemma facing central banks, take the market's temperature, and finally look at what's coming up that could tip the scales one way or the other. All right, first up, the absolutely incredible momentum behind this whole AI narrative. And look, this isn't just hype. It's being bankrolled by staggering, almost unbelievable amounts of cash, and that's creating a very unique kind of excitement in the markets. Let's just try to wrap our heads around this number for a second. $38 billion. That's not the market cap of a company. That's the value of a single deal for Amazon's cloud unit to supply OpenAI. I mean, that is a colossal amount of capital, and it's all being poured straight into the AI engine. And believe me, this spending spree is just getting started. Microsoft just dropped another $10 billion on a deal for more computing power. The global race for AI dominance is well and truly on, and it seems like the price of admission is in the tens of billions. It's wild. So this slide, this really tells the true story of the current rally. In one recent session, the so-called Magnificent Seven, just a handful of the biggest tech stocks, they surged 1.5%. But the wider S&P 500, it was totally flat. In fact, more than 300 companies in that index actually went down that day. This tells us the market has incredibly narrow breadth. It's not a rising tide lifting all boats. It's more like a few mega yachts blasting ahead, leaving everyone else in their wake. And let's be clear, this is not just happening in the US. The shockwaves are absolutely global. Just look at South Korea. SK Hynix, a key supplier to NVIDIA, has seen its stock rocket up an insane 240% this year. It moved so fast that the Korea Exchange had to issue a rare investment warning. Now, this excitement has become national policy. The president there has literally declared the 2026 budget the AI era's first national budget, and they're tripling AI investment. That's commitment. Okay, so let's pull back a bit and zoom out to get a more complete picture of what's happening in the global markets. It's so important that we look beyond the AI headlines to really understand the full context. Over in Japan, for instance, we're seeing a totally different story play out. The Nikkei stock average recently took a breather, snapping a winning streak. At the same time, in the currency markets, the yen has been getting stronger against the dollar, partly because there's more and more talk about potential government intervention. And you can see bond yields have been creaking up too. And here's the why behind those moves we just saw. The CEO of Mizuho, one of Japan's biggest banks, came right out and said he sees room for 1 or 2 more interest rate hikes. So what happens? The market starts pricing in a hike for December or January, and that expectation is what's putting that upward pressure on the yen and on bond yields. And hey, let's not forget, while AI is grabbing all the headlines, there are other really positive stories out there. Take Nintendo, for example. They just boosted their profit forecast for the whole year and upped their sales targets for the new Switch 2. It's just a great reminder that strong corporate performance is definitely happening in other sectors too. Okay, this brings us to the elephant in the room for, well, pretty much all global markets, the US Federal Reserve. The path they decide to take on interest rates is going to send ripples through every single asset class we've talked about. The Fed is really caught between a rock and a hard place. You've got some officials who are still super worried about inflation. But at the same time, the recent economic data has been a bit wishy-washy, and the whole threat of a government shutdown really muddies the waters. So with all that uncertainty, what are traders actually betting on? So what's the market consensus? Well, according to the CME FedWatch tool, traders are actually pricing in a nearly 70% chance that the Fed will cut interest rates in December. Now, this creates a really fascinating disconnect, right? You have Fed officials talking tough on inflation, but the market is placing huge bets that they're going to be forced to ease up by the end of the year. So we've got this incredible tension, a white-hot AI market on one side and this murky macroeconomic picture on the other. But how do we actually measure that? Well, let's take a look at an indicator that's designed to track the primary emotion that's driving investors right now. This is the Fear and Greed Index. And the cool thing about this is that it's not based on opinion polls or surveys. It's a composite of 7 actual data-driven market indicators. It's looking at things like stock price momentum and the demand for safe haven bonds to give us a single reading. So, is fear winning or is greed in the driver's seat? And the reading right now, 72. That is planted firmly in the greed category. Now, to put that into perspective, just 1 month ago, this same index was flashing extreme fear. That is a massive and incredibly rapid shift in sentiment. Optimism is clearly back in a big way. This slide right here really gets to the heart of our entire story. On one side, we have the greed narrative in full swing. We've got those multi-billion-dollar AI deals, the sentiment index screaming greed, and heavy hitters like Citadel's CEO calling this a very deep bull market. But then the fear narrative is just as compelling. We have other top Wall Street CEOs warning of a correction, we're seeing credit risk for subprime borrowers tick up, and we already talked about how narrow this rally is. And to top it off, valuations look stretched. The S&P 500's price-to-earnings ratio is sitting at 23, which is well above its 5-year average of 20. So with this clear divide, with these two powerful stories clashing, what should we be watching for next? What are the big catalysts that could finally push the market decisively in one direction or the other? Well, when we look at the economic calendar from investing.com, it's pretty clear that it all comes down to the data. The next U.S. jobs report, and of course, the next consumer price index, or CPI report, those are going to be huge because they directly influence what the Fed does next. We'll also be keeping a close eye on the last wave of corporate earnings, and you better believe we'll be listening to every single word from Fed officials for clues. And all of this leaves us with the ultimate question for today's market. Can this powerful, transformative, capital-fueled AI narrative continue to defy gravity and propel stocks higher? Or will the fundamental forces of the macroeconomy, things like high valuations, rising credit risk, and central bank policy, ultimately pull everything back down to earth? That right there is the trillion-dollar question that is going to define where we go from here.
Thanks for watching. Don't forget to like and subscribe.